Tesla holding its AI Day event last night. The company unveiled a new chip to train AI models and introduced plans to build a humanoid robot. Shares of Tesla down more than 5% this week. And other auto names are under pressure as well amid the global chip shortage. Joining us now is former Ford CEO Mark Fields. Excuse me, Mark. Friday afternoon. Mark, good to see you. Thanks so much for joining us. What do you think the aim, having seen AI Day, what was the actual aim of it for Elon Musk, and do you think it achieved its goal?
Well, I think it was twofold. One, as was stated, they really wanted to kind of lay out not only the progress that they were making in their software and their AI and their development of their bespoke chip for their AI efforts, but also to highlight their talent and to use it as a recruiting tool. To try and get the best and brightest engineers to come and work at Tesla. So I think that was the first thing. The second thing was, it's a little bit of a PR, more than just a little bit, a PR exercise to make the point from Elon Musk and Tesla's standpoint that they're still in the lead, very much in the lead in terms of being an automotive, but more importantly, a technology company. And I think they used yesterday to kind of continue to burnish their street cred on that. And I think they did that. Some may say, it's just a little bit of take the eye off the competition that's coming in EVs, but I thought it was a well-done event.
Well, we're going to talk about chip shortages in a moment, no doubt about it. What about labor shortages? Is it hard for a Tesla now to attract the best talent out there, or at least harder than it was at any point over the last 5 to 10 years for them?
Well, I think it's hard for everyone. You have to, I think, we'll put this into perspective. Everybody is trying to get the best and brightest, particularly software talent. And in that spectrum, I think Tesla, with Elon's reputation as well as Tesla reputation, has an edge over maybe some of the other domestic and foreign traditional automakers. So you have to put it in a perspective of relation to others. And I think they're in a pretty good situation. But they're also competing with the other technology companies like the Apples and the Googles and the Facebooks of the world.
But, Mark, isn't it a distraction for Tesla, the bot that is, from the fact that there is heavy scrutiny right now on its driver-assisted program, and now there's a federal probe into it, and also some criticism around its FSD, the full self-driving package that Tesla offers for an extra $10,000, which doesn't really do that?
Well, you're seeing Tesla become, obviously, a real car company, and with that comes real oversight. And when you're implementing new technologies like autopilot and full self-drive, as you develop those there are going to be issues. And in many cases, I think they do push the envelope in using customers as beta test users, which in the traditional auto industry, you don't put customers' lives at risk with new and unproven technology. So I think they're getting oversight on that, and this is going to be a groundbreaking, I think, inquiry from NHTSA, not only for Tesla but the whole industry. But at the same time, you got to keep moving your business forward. So events like yesterday for Tesla, you just got to keep moving the ball forward with your business, and deal with some of the things of being a mature car company.
Mark, is the chip shortage going to prove to be a blip in a couple of years' time, or is it going to prolong?
Well, if you talk to the automakers, the CEOs today, that blip is very painful. I mean, obviously, it first started out where they thought it was going to be a couple of months, but, the auto industry is still firmly in the grip of the semiconductor shortage. I think we're going to see this at least through mid-year next year. That's going to mean tight inventories. You've seen automakers like Toyota, who had previously stockpiled and have very close relationship with their suppliers, do pretty well. But this week they announced that 40% of their global production is coming out in September. So this is real. It's in 2 or 3, 4 years, yes, more capacity will come online for the auto industry and just semiconductor demand in general. But it's going to be a bumpy ride. And in the auto industry, well, the bottom line is volatility in production is the new norm for now.
2 to 3 years, that's how long it's going to take to figure this out, Mark? What's that going to do in that time period to production and profitability?
Well, you're going to see relative improvements, but it's still going to be very tight, right? Because of, everything is becoming digitized these days, and everything is, incorporating more and more semiconductor chips. Remember, it takes about 18 months and about $5 billion to construct and start having output in a semiconductor fabricator. So you can do the math, and you know it's going to take a little bit of time. And in the same token, Sarah, in the auto industry, you not only have tight inventories today, you have very robust demand, which I believe is going to continue over the next 18 to 24 months. So it's going to be really hard to build those inventories back up to where the automakers want them for the next 18 months or so.
Why haven't new car prices tracked higher then in light of all of this to the same extent that used car prices have?
Well, actually, they have, and they've done it in not so much in increases in MSRPs or the list price, Wolf, but more the reduction in incentives. So the net pricing has gone up, and that's why you've seen the last couple of months, each month through the summer, you've seen record average selling prices. The average selling price of a vehicle now is over, it's at record levels. And so you're seeing reduced incentives, so therefore the net price to the consumer is going up. And at the same time, as you said, the used car prices are going up as well because there's less people trading in their cars for new ones because they can't buy new ones.
Mark Fields, thanks so much for joining us. Good to see you as always.
All right, thanks, Wolf.